tips for first-time home buyers. Hi, and welcome to our channel. We are
The Denver Duo.
My name is Emily.Simpson,
And I'm Kellie McCall.
We are associate brokers, moms, and foodies.
Today, we're going to be talking about 14 tips and tricks for first-time home buyers.
Are you nervous about buying your first home?
Do you even know where to begin?
Buying your first home can be so exciting and nerve-wracking all at the same time.
We know exactly how this feels. We were first-time home buyers once too. And funny story, that's why we both got into real estate.
Tip number 1, start saving early. Here are the main costs to consider when saving for a home. Down payment. Your down payment requirement will depend on the type of mortgage you choose and the lender. Some conventional loans aimed at first-time home buyers with excellent credit require as little as 3% down, but even a small down payment can be challenging to save. Use a down payment calculator to decide on a goal. Set up automatic transfers from checkings to savings to get started.
Closing costs. These are the fees and expenses you pay to finalize your mortgage, and they typically range from 2 to 6% of the loan amount. That's additional money you'd have to pay on top of your down payment.
Move-in expenses. You'll need some cash after the home purchase. Set some money aside for immediate home repairs, upgrades, and furnishings.
Number 2, decide how much home you can afford. Figure out how much you can safely spend on a house before starting to shop. You want to set a price range based on your income, debt, down payment, credit score, and where you plan to live.
Tip number 3, strengthen your credit. Your credit score will determine whether you qualify for a mortgage and affect the interest rate lenders will offer. Having a higher score will generally get you a lower interest rate, so take these steps to strengthen your credit score to buy a house.
Make sure you get free copies of your credit reports from each of the 3 credit bureaus, Experian, Equifax, and TransUnion, and dispute any errors that could hurt your score. Also, pay all your bills on time and keep credit card balances as low as possible.
Keep all credit cards open. Closing a card will increase the portion of available credit you use, which can lower your score.
Tip number 4, explore mortgage options. A variety of mortgages are available with varying down payment and eligibility requirements. Here are the main categories.
Conventional mortgages are not guaranteed by the government. Some conventional loans targeted at first-time home buyers require as little as 3% down.
FHA loans are insured by the Federal Housing Administration and allow down payments as low as 3.5%.
USDA loans are guaranteed by the U.S. Department of Agriculture. They are for rural home buyers and usually require no down payment.
VA loans are guaranteed by the Department of Veterans Affairs. They are for current and veteran military service members and usually require no down payment.
You also have options when it comes to mortgage terms. Most home buyers opt for a 30-year fixed-rate mortgage, which is paid off in 30 years and has an interest rate that stays the same. A 15-year loan typically has a lower interest rate than a 30-year mortgage, but the monthly payments are larger.
When interest rates are increasing, you might consider an adjustable rate mortgage, or ARM. ARM rates are often lower than fixed rates, enabling you to buy a more expensive home for the same monthly payment, but they can also increase or decrease over time. You just have to be a little careful.
Tip number 5, research first-time homebuyers assistance programs. Many states and some cities and counties offer first-time homebuyer programs, which often combine low interest rate mortgage with down payment assistance and closing cost assistance. Tax credits are also available through some first-time homebuyer programs.
Number 6, compare mortgage rates and fees. The Consumer Financial Protection Bureau recommends requesting loan estimates for the same type of mortgage from multiple lenders to compare the costs, including interest rates and possible origination fees.
Lenders may offer the opportunity to buy discount points, which are fees that the borrower pays upfront to lower the interest rate. Buying points can make sense if you have the money on hand and plan to stay in the home for a long time.
Number 7, get a pre-approval letter. A mortgage pre-approval is a lender's offer to loan you a certain amount under specific terms. Having a pre-approval letter shows home sellers and real estate agents that you're a serious buyer and can give you an edge over home shoppers who haven't taken the step yet.
A Apply for a pre-approval when you're ready to start shopping. A lender will pull your credit and review these documents to verify income, assets, and debt. Applying for pre-approval for more than one lender to shop rates shouldn't hurt your credit score as long as you apply for them within a limited time frame, such as 30 days.
Number 8, choose your real estate agent carefully. Don't be afraid to ask questions and work with who you feel comfortable.
Tip number 9, pick the right type of house and neighborhood. Weigh the pros and cons of different types of home, given your lifestyle and budget. A condominium or townhouse may be more affordable than a single family home, but shared walls with neighbors means less privacy. Don't forget to budget for homeowners association fees when shopping for condos and townhomes, or houses in a planned or gated community.
Another option to consider is buying a fixer-upper, a single-family home in need of updates or repairs. Fixer-uppers usually sell for less per square foot than move-in-ready home. However, you may need to budget extra for repairs and remodeling.
Renovation mortgages finance both home price and the cost of improvements in one loan. Think about your long-term needs and whether a starter home or a forever home will meet them best. If you plan to start to expand your family, it may make sense to buy a home with an extra room to grow.
Make sure you research potential neighborhoods thoroughly. Choose one with amenities that are important to you, including the schools and entertainment options. And test out the commute to work during rush hour. That's important in Colorado.
Tip number 10. This one's most important. Stick to your budget. A lender may offer to loan you more than what is comfortably affordable, or you may feel pressure to spend outside your comfort zone to beat another buyer's offer. To avoid financial stress down the road, set a price range based on your budget and then stick to it.
In a competitive market, consider looking at properties below your price limit to give you some wiggle room for bidding. In a buyer's market, you may be able to view homes a bit above your limit. Your real estate agent can suggest a range for your offering price.
Tip number 11. Make the most of open houses. Online 3D home tours have become more popular as technology improves. These tours let shoppers visually walk through a home at any hour and observe details regular photos don't catch. They don't supply the information in-life person visits do, like how the carpets smell, but they can help you narrow down a list of properties to visit.
Open your senses when touring homes in person. Listen for noise, pay attention to any odors, and look at the overall condition of the home inside and out. Ask about the type and age of the electrical and plumbing systems and the roof.
Tip number 12. Pay for the home inspection. A home inspection is a thorough assessment of structures and mechanical systems. Professional inspectors look for potential problems so you can make an informed decision about buying the property. Here are some things to keep in mind.
Standard inspections don't test for things like radon, mold, or pests. Understand what's included in the inspection and ask your agent what other inspections you might need.
Make sure the inspector can get into every part of the house, such as the roof and any crawl spaces.
It's usually helpful if the buyer attends any inspections. By following the inspectors around, you can get a better understanding of the home and ask questions on the spot. If you can't attend the inspection, review the reports carefully and ask about anything that's unclear.
Tip number 13. Negotiate with the seller. You may be able to save some money by asking the seller to pay for some repairs in advance, or lower the price to cover the cost of repairs you have to make later. You also may ask the seller to pay some of the closing costs, but keep in mind lenders may limit that portion of closing costs the seller can pay.
Your negotiating power will depend on the local market. It's tougher to drive a hard bargain when there are more buyers than homes for sale. Work with your real estate agent to understand the local market and strategize accordingly. Number 14, buy adequate home insurance. Your lender will require you to buy homeowner's insurance before closing the deal. Home insurance covers the cost to repair or replace your home and belongings if they're damaged by an incident covered in the policy. It also provides liability insurance if you're held responsible for an injury or accident in your home. Buy enough home insurance to cover the cost of rebuilding the home if destroyed.
It may be worth buying an umbrella policy if you need to cover your home, cars, and other major assets. And that's our 14 tips for first-time home buyers.
Hopefully you got some good nuggets.
If you have any questions, please reach out to us. We'd love to hear from you.
We are here for you with all of your real estate wants and needs. We'll be posting a new video on Friday, so stay tuned. Sorry, I'm gonna start that over.
Ooh, decorating. Did you hear my voice crack? They're for rural home buyers.
I can't say that word.
Rural.